to the Breakfast Club. My name's Darren Hancock, and thank you for turning up today. It's Thursday, July the 25th, 2024, and welcome to the channel. Before we get started, I want to tell you about this guy. If you guys are ever looking for, do a little bit of shameless promotion here. If you guys are ever looking for a web designer, branding, getting your name branded, anything to do with graphic arts or establishing your name in a business, letterheads, you name it, any designs, logos, that type of thing. You got to see my friends out at Swoon in BC. Amazing young man. Baron Davis and the boys doing an awesome job of branding and getting your name out there, promoting you, checking your website, making sure your website's met all the safety parameters that you need to protect yourself. If you're interested, drop me a little note on the sidelines there, and I'll love to send you some information on the guy. He's really a smart kid. I'll post some stuff on here so you guys can see. I'll put some graphic up there so you can see this guy. I don't promote very many people, but this kid knows his stuff. All right, let's have a look at NQ. What a downward day yesterday, hey? Look at that. Last few days, just been nice big hammer down, all red candles for you guys, blue for me. So I'm looking for this just to continue down and to fill this fair value gap below us here on the 4 hour. And we've got another smaller one down here. Gonna mix up some of these colors here. So we still have some downside before we and I do like this as my little downside, no background border, make a nice black border. That's where I want to see this thing run into today. If we don't get a continuation for a Thursday reversal, we've got the Thursday reversal starting off already. So if we do see this mean threshold as a or consequent encroachment as the line in the sand, the bodies are respecting it, wicks do a little bit of the damage. Haven't filled it in yet, but if that's the turning point, and again, we're not picking the low, but if we do have a Thursday reversal, look for yesterday's high, previous high, and then getting back up into this fair value gap above us here. That's ideally where I'd like to see that head. Or what did I have marked there? Ah, yes. Thought I'd nailed it there yesterday when I was calling for this line. Remember when I put that line out there? When it hit that, I thought, ooh, I just nailed that. I was looking at the CAM model too. And then it started working through, and I thought, nope. So we'll move that. So if that was a CAM Model 2 entry that you would have taken there, would have came all the way down and taken you out because your stop loss is sitting right here. That would have just drove straight down and take you out. So that's the problem if you were trying to predict the lows, you're using that CAM model as an entry. I like to use a CAM model on the way up. Coming down is not so so in other words, if you're in a trend going up, we get this consolidation, you want to see this CAM Model 1 or CAM Model 2 dip down before and going back up. You don't want to run through everything and come back to it unless you're on the way, unless you come through it and use it the underside of it to continue on the downside. And you just have to look at your charts and see how often it works. Consolidation. You go down below it, come back up to it. Anyway, you get the point. So that's the 4 hour, 1 hour. Let's have a look at the 1 hour. Yeah, I want to see it come up and clean this liquidity out on the upside to start getting more of a bullish idea. It has to clear this with a bold candle, find support at this to continue pushing through into these levels. Because I don't see anything else in here. All right, let's have a look at it. Let's look at E-mini S&P. Do a 4 hour look. This one's filled now. So we've got this one left on the 4 hour. There's a little tiny one down here too. You got a whole pool of liquidity here. So remember the Dow Jones, we kind of fired right through these. So again, I'm looking at the midpoint of this for the downside, which would put us right into this fair value gap on the 4 hour to fill. So I'm looking at that level right there as the little line in the sand. Like I drew on the previous one. You want to see that, see if that level holds right there. Or are we just going to run for the liquidity below the market here, back into this fair value gap? And I'm going to put down as a downside objective, I'm going to guess somewhere in here. That's the box I'm aiming for. Could take a few days to get there. Could be the August low. That's what I'd be expecting to see. We'll see if, again, in order for this to be more of the, we haven't really, you didn't mark it out here. Yeah, it's right there. So 554, 57. We're already through that already. $54, $57 is right with that. The bodies are respecting that now. So we're obviously in a bearish trend, but if we do get this reversal today, again, I want to see this get above here, start reaching back into the range. Otherwise, still bearish for the time being. Right back up inside this breaker. We'll see if this little breaker holds here. This candle here, we have a swing. A swing. We want to take this low out and this low out. Takes them out. And we've come right back up to the bottom of it right here. And we're getting a bit of reaction off of it. So I keep my eye on that candle right there. See what you see, whether it gives way or not. Yeah, this session open. That'll take you right back to the top of that candle. So it's open. And if you get a reaction off of that and back down again, leave all this pool of liquidity intact. Otherwise, 10 o'clock, look for a run on this liquidity quick, and then maybe a continuation on the downside. This is a good example of that wiggle room. So if this is where you see it trade above there, and you go, as soon as it trades back into that candle, traded above it here, it literally opened on it and tapped it real quick, like that, and then left. Look for the first high, second high. Small range, not worth trading, right? You get the point. Traded above it, come back, tap it. Looking for the first level of liquidity, paid, fair value gap, paid, and you don't get the high. You're inside that bigger range. you get a reversal. Always look every time you see a high get taken. Don't always be looking for up here. The immediate high gets taken. Look for the fair value gap, see it traded through on the way down. So you got a small one here, traded through it here. Now you go, now this is probably not reaching for the upside. It traded back into it again right there for the short, same kind of real tight one you saw right here. And now you look for the downside. This to fill here on this fair value gap. That's the discount array. You come all the way back down into the discount array here. You've hit it right on the money here. And then you come down and fill this one. And now you're back inside this range. So you go from discount to premium. You're right back up into here again. And now you see we're just closing above it. So this might be another little push higher. And we close below it. So you're stuck in no man's zone right here, right now. So you gotta wait. There's a small fair value gap below you here in the discount portion of this range. And we have the breaker. So keep your eye on the breaker, fair value gap for continuation. Look for all the liquidity pool above you. And let's look at something new. Let's look at the Dow Jones. 4 hour. This is a really nice reversal. See this swing point right here? You got a small reversal here. Body trades below it would have come back up and taken you out. You can't win them all. So you wait for it to clear the breaker, or this there's a second one here. You trade through it. You don't come back to it. Breaker. You close below it. Don't come back to it. So all you have is fair value gap, breakaway gap. You come back and tap the edge of the gap there, and then continuation on the downside. Looking for further downside, I'd be looking for somewhere in there for now. And then you got this little guy here and here on the range, discount arrays. I'd have that one there. Two boxes aiming for. If we hit this one, great. Aim for that one. You can tap them or go through them. Hourly. Nothing in here yet. Five minute. So this feels more heavy for me right now than any major lift going off of here. We're digging into this breaker here. Takes these highs. Feels heavier. So if we continue downside there. That's going to be in contrast to the up pressure on NASDAQ and ES. Dow's going in the opposite direction, so you've got a divergence there. Oil. Let's do a 4 hour. Oil came right down into that big box on the 4 hour and has hit right into that 4 hour fair value. Yeah. So now we're looking for, that's just returning here. So if we're just going to hit off of here and then reverse and start coming back down again for the next 4 hours, what do we got left? This was the box I wanted it to aim into. So we'll see if this gives us a reaction out of here. We have to start getting above here though for this to be bullish for me. We have to use this fair value gap and that breaker as a form of support to go higher in oil on the 4 hour, the 1 hour. Let me just get the box out of here. I should have put that original box as the one I remove. I'll put a clear box in there from now on so you can see clearer what it is, the objective I'm aiming for. So we've hit off the fair value gap, off the season session open here. So if we get a reaction off of this and we continue coming back lower, kind of keep that in mind because this is the breaker we're returning to here. These up close candles that take out this low. If we get some support off of that, continue pushing lower. We have to get through these. We have a fair value gap here that we're climbing above and a small one here. So ideally you want to see these come back, find some support and start eating into this. So if this freezes here and then comes back with a little wick and you see it just hanging around in here for a little bit into this breaker, it's going to start working it. You want to see it, if you're bearish, you want to see it react off of that and start coming back down quite aggressively. If not, if you see it hanging around in here, look for this to take out this high and then run higher. Look at that range right there. Pull the fib tool from high to low. If you're below 50%, use your fib tool to escape. Aim for your first high. Fair value gaps. Your next breaker, this big sucker up here. It runs down, takes out these old lows here. And this low here. And then you get a new one. Get a swing point. And the continuation to take this one out. So I like the fact that it's still pushing up here and not just hitting this and reacting off of it nicely. So I like this for more upside today. If this holds and this holds. If not, you still got lower. That's where I'm sitting with oil right now. Euro. I'm slightly bearish in euro right now. Downward box. Looking for down here. If we manage to get above that line on a close, if we get above that line on a close, then look for higher prices. No, we'd have to get above. Immediately for the next high would be above here. And then if we get above Yeah, if we close above this high and use this breaker here as a support to go higher, those are the two scenarios I have for you there. Pound. You've already got your reversal on pound already. I think we talked about this yesterday, or no, a couple of days ago. You had the reversal here. You traded back into it nicely right there. It's perfect. We talked about this at the beginning of the week, I think. Monday, right there. We wanted to see the perfect entry would have been up here for short, but we were going short. If you didn't take it there on last Friday, then Monday you wouldn't have got it. And we're still continuing down into old high. We're getting a bit of reaction off of that and a fill of the fair value gap down here. So objective hit. Next one would be here. If you're going to push down a little deeper, look at this order block here. You want to see this as your next objective to fill. So we'll see what this is like inside this fair value gap. We worked it inside of it, look for further downside into this guy. The other scenario is if we react off of this, we've got to get through this candle to the upside. And then you're going to work that fair value gap there. Ideally, if you want to go long, you got to get through here again. So right now I'm still bearish inside this range. Pull your fib tool from here to here if you're on that run. Optimal trade entry 40%, which is 70%, sorry. Sitting right here. 75% sitting right here. That'll come back and fill in just that last little piece right here. And then see if you get a reaction off of that. So you see this on the daily. If you're paying yourself on the way down, as soon as that hit 50% right there, you move to break even, pay yourself 50%. This is a daily chart now. You've made it all the way down to 60, pull your stop loss to 50. And now you hit 70, so pull it all the way back to 62. So this is all daily profit, same kind of principle. And if you hit 75, you'll quickly pull that to 70. And if that's an alternate trade entry to go long, you literally caught all the juice on the way down inside that small retracement or in that daily retracement. Anyway, that's how you can look at that one. We hit that session open we were talking about, so that's good. I want to see that stay there now. If that just reacts off of that and just comes, now watch how fast it reacts off of this is what I'm looking for here. Or are we staying above here on a close? So watch this hour, see if this closes above here and here. The more it digs into this, the more positive I am for upside. Or the longer it hangs in here, the more positive I am for upside. Aussie D, look at that. Yesterday we closed above it. It's just a simple, or today, this morning, we closed above it right there last hour. Came back in, we tapped it. Now you're looking for more upside. Look for the session open. The ideal entry is right here. Okay, your ideal entry is right there. So if you trade below it, come back to it, you're out wrong. We're still continuing on the downside. We did not trade above this level here. So if you can't get this, if you've missed this one, you say, oh, well, You can't get your entry here. Wait for this one. So if we close above the session open and we come down and hit this objective here, or this order block here, then you got that as a means to start this potential swing point. And then pull your fib tool, do your 50, blah, blah, blah on the way out. Keep an eye on this as your fail safe. Would be perfect from here. Well, it would be the best opportunity to not take losses down here. You wait. If it closes below it, ideally you want to see it just tap it and go. You don't want to see it start digging down into this order block here. But the line in the sand is that mean threshold of that candle there. Before your stop loss gets taken, if that mean threshold gets traded through, close it. Bitcoin. This is the one we called a few days ago. See how it came back into it nicely. We're working it all the way back down into where I would have put my box. My downside objective would have been right there. Strange enough. Look where it went. Premium array, discount array. High range, low range. Like array, to like array. Now you know what those little boxes are. And you see me put a box down here. That's what I'm looking for, the discount array. So you want to see if this holds now, and you want to see if it finds some support at that and starts to use this level. Mind you, there's a, retail's looking at this as a bear flag, right? So if we get through this level here, and we use that for support to go lower, look for these lows to get taken. Ideally, you want to see this high get broken for a break in structure with a fair value gap, a swing, change in direction, taking out old lows. But you haven't taken out these old lows, so keep that in mind as well. So I'd like to see a nice little consolidation. CAM model 3 entry. So you'd see this drop down in here, clear out these lows, create a fair value gap, come back up, go through it. CAM model 1, 2, and the 3 would be whatever that fair value distance between that leg's bottom and top. 50% of that would be a CAM 3 to go higher. That's what I'm thinking about for Bitcoin. So you kind of almost want to predict it in your head where you want to see the candles go. Doesn't mean that's what's going to happen, but that's what I want to see. And if I don't see that, then I'll look for something else. Let's quickly look over here, and I will say my good mornings to everybody because we had a couple more minutes. Oh, we're already into the plunge. Whilst I was yakking, I missed the plunge. I see it now. So anyway, remember yesterday we were talking about soybeans? Or a couple of days ago, we were talking about soybeans. We want to see it come back to that level I put here. Look at that. Schmuck. Right on it. Now we want to see that start climbing. So if those of you who took my soybean entry yesterday, good for you. You're caught at a perfect entry to go along, and that's on a daily candle. You're welcome. Wheat. Wheat is low. This is the objective we're aiming for in wheat. Premium array, discount array, done. Now you gotta see if this low gets taken, creates another new fair value gap to start running back up higher. So you want to see these lows get taken. Now that's my next objective, is for Sell side liquidity is right there. See the sugar? We wanted this low to get taken. It hit us yesterday. Perfect. And now we've got the reaction of it. Nice. And we just dip below it just to clean it out. You see that little tiny wick right there? Make this a little bigger so you guys can see it. Oops. Did I get the right one? Nope, that's wheat. Suka. See that? Just swept them. Now we're getting the reaction. So watch this level right here. And where would you be aiming for? What's your upside objective? Right there. So if you get above here, come back, find support at this. Again, ideal entry is right here. Wiggle room is down here. If this turns into a fair value gap, like if that closes up here and then comes back and taps this and leaves that open, that could be your wiggle room. I would like to see that as a breakaway. Create a breakaway gap in here, find some support at this level, and then start pushing higher. Look for this breaker to eat through and just tap into this. If you start working into it and eating through that guy and get on top of that, then we're looking for higher prices again in sugar. So just keep your eyes on that area there if you're a sugar person. If you're a sugar sweet. Cafe. Ooh, the cafe. We're there. Now we were waiting for this to break out of here, right? One way or another, because we could go long or short. Now we finally closed below that yesterday, so look for it to run back up into here. Again, ideal entries right here for a short. If you're wrong, you hopefully can get out, get on the right side of the market to go higher. If you're here, look for a return to that low. There's 1, 2, 3. 3 different entries there. Off this order block, there's a little tiny imbalance up there as well. Old low. Some key levels to look for in here. Where you choose to enter is up to you, whatever your model is. And look for liquidity down here on the daily. And if that's the case, I do like if this CAM2 model here holds. Ooh, yeah, you got an imbalance sitting right here. Dodgy. Yeah, if we close below this midpoint of this consolidation here, then look for the first area is right here. Oh yeah, okay, so area of interest. I already have it predicted, our little template made for already. So that's where I'm looking for that one to go. Lumber, nice reaction off of lumber. Finding support here, pushing higher, like that. We can get on top of here and use this breaker as support. That'd be awesome to go higher. Little lean piggies. They get reacted off that low we're looking for. I don't know why I haven't been did I miss this or something? That was weeks ago. Days ago. Last week. Anyway. old highs. See that old highs? They broke through the old highs, came back to them nicely, and now we're lifting higher, getting through this. Really good. Find some support at this now, and now push higher. I want to see this high get taken. That's the next upside liquidity pool for me, for biggies. Meanwhile, back at the ranch, what have we got? Well, let me just quickly look at gold here. I spend too much time in each one of these charts here. Okay, this one's been hit. That discount array has been hit already. So I like to see, I'm still inside the range. So if we don't clear this low here on a close, it's got to clear that low on a close for me to go lower. Otherwise, we're still range bound here, this consolidation. You want to see this get above here, find support, then use this as leverage to go higher. And there's really, that fair value gap above you is what you'd be aiming for. What's our fella doing here? Yeah. I'm not sure who that was talking about this yesterday. See how we could have gone up higher? We're looking at this and we're saying, well, it can go higher if we react off of this, and then lower. So it's going to close below that. Closes below it, uses the upper part of it as support, and now we're degrading it. So that's the gap we're looking to close below, come back in, use the gap as support to go lower. So the gap is the key level for this stock to go higher or the stock to go lower for me. None of this volume stuff matters to me. I don't care about I don't even know what this company is. But if I was looking for this to go lower, I'd pull my fib tool out of here. And we're just curious. I'm just going to curiously hold on to this one for a while and just have a look, see how well she goes. So we're still bearish until, see, now we've taken this low out. Look for this here. If this turns into a fair value gap, if we close today below and that turns into a fair value gap, that's your area of interest you keep your eye on. Because if we close above that and we use this candle here as support, then we're going back up above here. But right now, I'm bearish on this stock, whatever that stock is. I don't know, the Intuitive Surgical Instruments. I'd like to see it dig down right into this gap you've got here. Just to recap that. You can see how when we traded above these, when we came back down, found support at them, you went higher. And as soon as you saw that gap and you see it coming back into it, you close your trade. Because that gap's now being utilized. Did not go higher out of that, it went lower. So that was your exit right there. If you didn't take something off of that high, as soon as that gapped up, a lot of people were thinking, oh, it's going to take off, it's going to tear up there. Well, that's your area to keep your eye on, because as we've talked about, if you clear out an old high and you create a gap, fair value gap, price imbalance, and you work the other side of it, then you're looking to come back into that range, looking for an order block or an old high or whatever. Then you look for these little swing points to get taken out, and then that little guy there to form. If this closes here today, then you look here. You're safe all the time. You're staying below that guy. For a short, that is. Anyway, let's get back over here and have a look at what's happening. Let's look here. All right, let's say good morning to everybody here. Hans, good morning. Talkwee, how are we doing? Adi, Joe Mac, good morning. Jurgil, 313. I haven't seen you before. Welcome, Jurgil. Cheryl, good morning. I haven't seen you around for a while. You've been sitting kind of silently in the background there. Welcome. Curry Fish, how's it going? Lewis. Barry, my friend, good to see you. Harasso, Robin Hood. Look at Robin Hood. We just got Robin Hood in the house. It's been a while, Robin. The Hood. How have you been doing? Robin Hood was in here a while ago. All right, let's get back into this. So here's the reversal. Whilst I was yakking about that other stuff, missed this nice little reversal right here. See how the body trades below it? Trade back up inside it. Ideal entries right there right on the body. And you would have caught a nice little run all the way back down into here. This fair value gap here in terms of this range. So what I'm looking for now is mitigation block here. Find some support off of this. Keep pushing down. We've still got the downside objective for this morning. What do we got here? Take out little highs here. It's another reversal. I want to see something significant get taken out for that, like this kind of thing here. You want to see this is the same kind of pattern though. See how the body trades below it? We trade right back up into it, hit it perfectly, and continue down, and you're reaching for the rejection block. That's the only discount array you've got left inside that range right there. Is this order block, this mitigation? I guess it would be a breaker because you do take out some little swing points here. So you want to see this hold, mean threshold, holding. You want to see that continue pushing down now. Let's see how well this holds price. Good morning, Derek. I got so caught up in the 8:30, 9:30 news and the open, I forgot to join in sometimes. It's all right, buddy. It's all right. With nothing but love. Love, 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 love. Railroad tracks, they call that in BTMM. What's BTMM? BTMM. What's that like? Don't BTMM, don't backtalk me, man. I don't know. What does that stand for? Don't backtalk me, man. All right, I'll take your word for it. A spinoff from ICT back in the years. Beat the market makers. Oh, okay. 10 a.m. SB to those highs. Let's go. It's a mentorship program. Mentorship program you can join. They don't have the answers. Is there a rejection block at 4:20 a.m. Eastern time? Which time frame are you on there, Russell? At 4:20 a.m. $4.20, a rejection block. This is 4:20 right here. New York time, looking at the 5-minute chart. 4:20. This one, a rejection block. There's a little tiny one right here. That's what you're looking for. That little tiny guy right there. But we're looking for a deeper run today. I think I was calling that. Oh, it's on a different chart. Oh, we on a tear, my friends. We're on a tear. Pay yourself at rejection blocks. Oh, yeah, I see what you're saying. It's early. We're in the meaty part of the day. So, yeah, pay yourself at that rejection block, but also if you trade on the 5-minute chart, that's for definitely the one you're looking for. Then pay yourself there. But we got a deeper objective today. What? I'd say 415 candle on my chart. Yeah, that's the deeper one. Mr. Pips, good morning. Pay yourself at rejection blocks. So we're headed for this guy. Here's what my objective is for the day. 18,861. See how our Dow Jones ran for the highs? So the body closes above it, comes back, finds support at this, pushes higher for this. We're finally taking these old highs here. Now you want to see this. Keep your eyes on this for a reversal. For this to get back in sync with the rest of the markets going lower. So now they've run their highs out. They ran to their quick liquidity pool sitting above them there. Now they're going to drive down. So that would be my thoughts on Dow Jones making a run now. So just keep your eyes on that level. And you want to see it close below it, come back up inside. Ideal entry is the mean threshold of the daily, or the consequent encroachment of the daily fair value gap to go short. But 1, 2, and 3 potential entry points. Oh man, we are killing it this morning. That's the 5-minute chart. Let's look at the 1-minute chart. That's already happened on the 1-minute chart right there. So I'm going to go short on this. And then I'll go short one more right there. Put my stop loss up there. And stop loss up there. And then we'll go back to this guy here. Did anybody else catch these trades this morning? Okay, so that took me out. That's my stop loss was here. That's a nice run. 500 and 170. So this will probably continuation on the downside, but keep your eye on this. See if you've traded above it. Ideal ones here. I'm going to do one long right there and see what happens. I don't even want to see it get down into here. No, I don't like that. Still got the downside objective still. This is the point where if you were in this, I would collapse it there anyway, just because that's the potential reversal. But the fact that we keep drilling down into this, I don't like that idea. But got a really tight stop loss. So we'll see what happens. Nope, I'm out. That's going down some more. There you go. That's good. We're just back in sync again. I'm just moving my stop loss to break even. I just got in right off that. I was on the wrong side of it, which is where you get that trade there on the wrong side. So then as soon as it started coming to below it again, I was like, I'm out. So now we're short again. And I got zero stress trades now, so they're all in profit. You got to be quick for this one, because if you're wrong, like you think I got out there, I have my stop loss on this run down here. And then when they did that reversal, you think, is that a reversal? I didn't check to see if we've actually broken an old low over here. I just went with that simple rule of if it trades above it, then I'm out. And then if it trades below me here on the close, then I'm back in for a short. And my stop is like super tight. So if it does come back into here, I'll get back in there. I'm trailing these down. I talked about this yesterday. I trail it down for the one previously behind it until you see one get taken out. I'm in lots of profit today, so I'm not going to risk anything. As soon as this candle closes, I'll move in behind here. And again, I'm trailing it a lot faster than a lot of people. Yeah, I'm over $1,000 already too. Well, $1,500 right now. So yeah, it's going well. So heading for our objective today. Let me just put it on the chart here. So I got it on this one as well. What is it? 18 something? 18,870. right there. Took me out. I'm back in with a smaller number now. Just gonna move this one to Yipper. Took me out. I went right back in again with half of what I had here. Just because that objective, I still think that objective's going to get hit. Took me out. I'd love to see that come back up into here. So you can get short on that again. Joe Mack, hope you do well. I'm cutting off now. Keep what I got golfing tomorrow. See you guys next week. Take it easy, Joe. Glad you made some money, buddy. I'm going to be real careful about protecting my money now. Just because it doesn't reach here right now doesn't mean it's not going to make that. So you pull your fib tool from here to here. There's 50%. 62 put us right on that money of that breaker right there. This up close candle. Optimum trade entry reversal. Be careful though, because we're not here to try and predict a new top here. But that's what I like to see. Nice big dig up in there. Starts right off the breaker. Fair value gap fill. right on the money. See how we closed the body on it? Beautiful. Now, if we close above it, look for this one to get taken. And if we get this upside taken, we have a break in structure to the upside. Now we've got to run back the other way. So we're literally sat on it, come back down, tapped it, and now we're pushing through. So we may not get our little run back down. Right now we've got more bullishness than bearishness. If we close above here, we got to close above that. I think we did right there. So now you want to see this ideal entry is here for a long, because if you're wrong and closes below you, come back, tap you, use this as a inversion now to go shorter. Mean threshold, 79% optimum trade entry reversal drill right there. Lots of opportunities to say, is this the high? Great day, Joe. Take care. Look like start a reversal in Q and ES. But might get fooled and have more downside. Yeah, that's the potential, right? Just to keep going down. We see that get right on top of this now. See, we've had the reversal, trade above, come back inside. See how you can kind of argue both directions, right? This could be the optimum reversal, and it could be the also the continuation to the upside. I like this for upside now. Thank you for all your teaching. You're a clear teacher. Thank you. You're welcome, Joe. Rejection block. If you get in on here, rejection block. What loss? You took a loss, curryfish. Wow, man. If you go onto our Telegram channel there and share your charts, no one's going to ridicule you. No one's out to make you feel bad. And if they do, you let me know. I will ditch them right away. We're here to help people out. So if you want to share your chart on Telegram, I'm more than willing to help you out and show you. Well, you know, there's lots of people on there that will help you out and show you where, help you modify your setup. Maybe it's a psychological thing that keeps taking you out. Maybe you got a good setup, but you're not psychologically following your trade. You're chasing price or whatever the case may be. So yeah, if you want to share it on there, I'll be more than willing to help you out. We've taken that high now with the wick. Sometimes it's how you manage this trade. A lot of people are still in this on a short, and your profits are getting eaten up here when you've got a clear reversal that showed you. And yeah, you saw the doubt we could have here and call it, but you got to stick with what you're seeing here and say, is that a 79% optimum trade reversal? For if you're buying or marrying this trade down here, then you're looking for more trouble, right? You got to be prepared to say, nope, price action showing me something different. And you got to be prepared to respond to it. Now you're looking for it to come back and just clip this low here. I think it's just going to run to these highs. I'd like to see it clip this, come back into here or here, and then go higher. We're right back up into this range. So again, watch out for this. If you go to here, you're at 70% of that larger range. And of the main range, you've got just over 50%. It's come back and hit the level we're looking for. I want to see it dig right into here. And keep in mind, we've just took this high out. So watch here, watch. Because if you're looking at this one, there's that little small range there. You've hit optimum trend entry. Place a short limit at the open price at 10.04. Stop loss at 10.05. Candle took me out. I placed one short at the opening at 10.04. 10.04. You place a short here. Stop loss at 10.05 for a short. Okay, so if you've got your short here, your stop loss is here. Wait a second, that doesn't make sense. Price at 10.04, stop loss at the high of the 10.05 candle. Okay, so you went short there. 10.05, you went your stop loss there. So as soon as you see this forming below, as soon as you take that low out, you see that form, keep your eye on it and trail your stop loss accordingly. So you haven't developed a fail-safe yet. Curry fish. Go to my video on the CAM model entry, and I think I show you how to make it fail. I think I have a whole fail-safe video showing you how to make them, how to protect yourself in those environments. And what a fail-safe's for. So just develop a fail-safe for you. Oh, sorry, 10.16. You went short at 10.05. Right, short at 10.08. Short at 10.08. Oh, you're throwing me off now. Find out exactly what you did. I don't know. You could give me too many numbers. Share your chart on the Telegram so I can see, and then I can help you out. Oh yeah. Okay. So if you put your trade in here as a limit order and it comes back and tags you there, your stop loss is here and then it tags you out, you already see this is the reversal. If it's coming back and you've put a limit order on there and you see this fair value gap get formed here, you don't want to see it come back to you to get your limit order into short when you've already ran that low. This now becomes the potential for the reversal. You don't want to get caught up sweeping a reversal on a limit order. You either go in a market order there and run down, put your stop loss above an old high. Yeah, that's the problem. So let's say you did do that and you see this. Let's say your 1004 candle, which is right here. If you actually have your limit right here, you go in and all of a sudden it goes boop, drops down. If you watch where that closes above there, you go, I'm on the wrong side of this. If I come down, I get a little bit of profit. You're lucky. If you can hit this one, that's your ideal entry for your long. So you got to be really observant as to what's going on in here where your order is in relation to where price action is at that particular time. Yeah, it's a tough one. I don't blame you, Curry. That was a tough one. You'd have to be really on the ball to know your inversion fair value gaps and your reversals, limit orders, where you are in time. Like there's so much to focus on in that trade. Looking for the liquidity pool above the market here. My market order was lagged before showing my screen was up 10 points when it did. That usually doesn't happen like that. Target was 50% of the range along with fair value gap right above. That was the price where price went. Liquidity ran 50. Okay, got to jump. I got my small trade in. Might get on later. Blessings. Okay, sorry I missed you, Dave. Think one and done for me. Lately I've been trying. Always keep your mind on watching as these little highs get taken. We're back to this breaker here, this candle, or this bigger candle here, whatever one's the highest, this guy right here. So we're right into that. We could see a nice little rip down reversal here. So kind of watch off this breaker. We are looking for that liquidity above the market, but that doesn't mean we won't get a nice retracement back down. I want to see this level right here. Mean threshold hold price. Continue on the upside. Well, sir, I placed this limit on it because I was expecting price to retest the 104 opening and then dump lower. I wanted to close it, saw the bearish reaction at 1017, so I decided to hold it. Okay. You saw this reaction here, right? And don't forget, you're looking at, that's where you have to look at this and go, I've traded above this. This is technically a reversal now. And this is running back down in for those people to load up and go long. So if you're short on this and you manage to catch a little tiny piece, when you see that that's a reversal, you have to believe that. If you don't, and you believe more strongly that that's a reversal and this candle's giving you your run down instead of that giving you the entries for the long, then that's just a trust game. That's one of those ones where you have to kind of watch it over time and trust it that that's a reversal. I mean, you'll even hear when I was calling it as it was happening, we were calling it as a reversal, but we're also calling it as the potential to go down here because we've been conditioned to want to look for that objective, right? And that we may still get this objective after lunch. We may still get that objective now, but right now we have to say we've got confirmation. So if you're still not sure, you move to the sidelines, wait. And if you use this fair value gap as a means to continue going lower, then you can say, okay, I'm on the right side of this because now we've traded below this level and now I can get in on short. I don't get it there. I just get a little lower to run even lower. But because it didn't, then you say, okay, well, I'm going to wait now for this to be a confirmed run. I want to see a break in market structure for higher. So it did right there. Good. And then you say, well, when it comes back to this, I'm going to get this to go higher into the range. So right there, body breaks above it. You come back into it right here. So now you can go higher into that. So now you can take your trade that way. You're just looking for confirmations that show the direction the price is headed. And don't marry your idea that you want it to go down there. I wanted it to go here. It didn't happen. We have to be able to be flexible enough to be able to recognize when markets are saying, I'm denying you what you want, but I may come back and get it later. So I'm going to throw you off, give you the impression that we're going to run this all the way back up in here for taking out these old highs or whatever, right? We want this old high like we wanted this old low. So unless if we see this give way on the downside and we come back and find support at that little breaker there that took this little high out now becomes support for me to go lower, even though it's not, we don't have a reversal happening yet. I think it's still going to run up here. And if you're looking for a premium array, my premium array would be right here. So you should see it clear through this and hit this anywhere in between here. So let's hit the first one. You still want to see those highs get taken out. Bingo. First little hit, objective hit. So that liquidity pool is taken. Premium array is hit. Now it would be interesting to see if this premium array holds price and that box there holds price and we start to reverse. Come back down. I'd like to see this stay open, create a little fair value gap for us above here. Don't fill that in. Hold that. Come up here. People expecting it to go here. If it doesn't go there, rejection block would be a nice little objective. That's filling that one in. So we got this little guy right here now. So we do have a fair value gap up here. I'd like to see the fair value gap occur above the high, not below the high, but I'll take it. And if we close below this, watch out for the bear trap. If we just close, if we don't take out this structure here, look at that, right to the money, right to the mean threshold of that box. I want you to be successful, Curry. I know you probably got the right ideas. You just kind of stay in price action with me every day. You see this, we'll study price action and watch what we're looking at. And you'll get more and more confident. The more you see these, the more you'll start to go, oh, I'm on the wrong side of this. I got to get on the right side. Or if I'm not sure, I can save my trade, move to the sidelines and wait. Where's my confirmation? Where's your next level that you can find some support at and say, okay, yeah, I was right. Don't beat yourself up that you missed it. Say, yeah, good, I was right. Where's my entry? It's right there. If it comes back to me, I'm short right there. And if it trades back above that again, I'm wrong. I'm going back. Now I'm looking for this. I'm staying out of my trade. Take my loss here and I'll wait for it to clear this high because that's the breaker that sets the run. So as soon as that breaker is cleared on the upside, now I know that breaker looks like it's going to provide a level of support. Typically, heading back into this range, pull your fib tool, look for 50%, move your stop loss to 50, start to get into that routine, that ritual, right? And see how that kind of works out for you. If not, then, you know, I don't want to interfere with your trade. These are just suggestions. It doesn't mean I'm right. I'm always right or whatever. We're always just trying to help you out. So don't take any of my advice as you have to or you suck or anything like that. It's I care and I want you to have the best read of price action. And as you can see, we're trying to read it. It's like right on the money. We're trying to look at one specific level. Is that going to hold? Am I going to come back? Am I going to tap that? We're looking at precision places to come back to. We're not just saying, do we understand price? We're looking at precision levels for us to come back and tap. We're not coming to a vague area anymore. We're looking for specific levels to react off of to get price moving. That's a different way. That's a whole new different level of analysis now, right? So now we haven't got below here. See how we've just come back and tapped it? So that little fair value gap you draw out here, you went above it, came back, found support at it, and now we're digging up into that fair value gap above us, that premium array again. And we've already come right to the edge of it. Or no, almost to the edge of it. I've got a good journal discussion tonight with myself. I caught this nice little run down, and then when I saw this reversal, I've been nibbling this on the way up. I didn't just stay in it and committed to it and say, oh, like I did with this one. And the reason was I had this thought about this level down here still. So which we may get to after lunch. But it's weird how I'm kind of nibbling, not trusting the fact that this could turn on me any second. So I've been nibbling in little bits of profit in here, jumping in, jumping out, jumping in, jumping out, instead of going, had I just committed to this, I would have doubled my profit here and ran all the way back up again. So I've been, this is a good psychology one here, and it's kind of residual downward thinking, overcoming residual downward thinking with this level, this V that we've got going on here. This side is a huge psychological game for me. I've been calling it, but still not trusting it enough and thinking of that level down there. And that's all I kept thinking about on this way up. Think this could be coming back here. Oh, this could be coming back here. Oh, now it could be coming back here. Oh, there's the 50%. Could be coming back. And I keep getting in and out, in and out, in and out. I've nibbled my way up with some profits, but I tell you, it's an interesting journal entry to make in terms of the psychology of my trading right now. I want to see if it reacts off this level. So now we've got through here. Now we're extending the range. So I expect to see this high get taken now. There's the rejection block. So if you were paying yourself from here to rejection block, you just banked all the way up. Okay, so we're set. The range is now extended. I wanted to see this close above here and come back, give it a little tap before running higher, but it's inside the rejection block right now, and go on, run out. If it doesn't, that would be funny, because people are like, come on, just one more little notch above, take me out. And it makes these equal highs and then turns around, comes all the way back down again. I got you. We got you, Curry. We got you, buddy. Bing, there, done. All right. So next little area of interest for me is right. Oh, this is a tight one. Ich tight like a tiger. Tight like a tiger. Up there. And if we clear that one, then we're extending the range, taking that higher still. Russell, you were calling that, weren't you? Yes, you were. It says right there, liquidity run may be running to 19,200, but not sure it will go there, go that far. And look at you, Russell, calling it like a demon. Well done. Bodies are respecting that fair value gap. Just cleared the highs. Ooh, I like this. I like this. Come on. You see it clearly now, Cheryl. Ooh, yeah, girl, you go. Yeah, Hadi, look at you. You're saying, oh, he's looking for the potential reversal. I don't like to see that wick. See how that wick just came down and then just shot back up again? Yeah. I want to see that. Take this below that candle. Use that candle for support. Ideally, you'd like to see this structure break here. And use this bigger one, this breaker right here that takes this high. That's ideally where you want to see it go. But see how we've traded below it right there? Now we're coming back up in it. So the ideal entry short would be right there. Oh, I don't want to buy. I'll take the $100 anyway. I want to short that right there. I'm probably wrong. And I'll put the stop loss up here. This is where we get to try it out. So I didn't quite get it. Yeah, no, it's already out. Oh, I'm taking that out. It's already eaten through that order block. It's going higher. So I went with it right on the cusp there. It just traded below it. Then it came back into it. So as soon as it eats through the mean threshold of that candle, I don't like it. So now I'll definitely wait for it to get below the lows before you consider entering that again. So even though my stop loss was up there, see how we traded through it right here again on the upside. So now you're bullish again. And now we've come back and tapped it here for more bullishness. If we trade through the bottom of it, now you're bearish. And it's not, this is why you're getting stuck inside this. So you go bull, bear, bull, bear, bull, bear, banging around in it. So you want to see it clear a high now. If you get caught once, that's okay. If you get caught twice, you rethink your philosophy. So for me, I'd have to see this take out these lows here and this guy here, and then get short on it from there. Ideally, you want to see the structure break here. So that's the bull trap, and or the bear, yeah, the bear trap. And now I'm gonna wait. You don't want to fall into the trap the second time. That's why you have a small stop loss and you wait. I don't know why I've got 31 up there. What the hell's 31 doing? I thought that was kind of a big stop loss. I like the way you saw that right away, Hadi. You were looking at that right there. You go, ooh, reversal above an old high. Yeah. And you see how the fail-safe saved me here? As soon as I saw that mean threshold being attacked again, I thought, no, I don't want to see that. I want to see it, tap it and go. Be picky about your trade. Don't start, you'll see yourself trying to talk yourself out of your trade. You'll say, I believe this is a short. I want it to be a short. And then when the price is showing you that, hey, look, I'm still running higher, you got to be prepared to say, I'll take a loss. Don't look at those numbers over there. You keep looking at the dollar signs. Look at the price action and say, That's my rule. Follow your rules. If it trades, it hits it and then starts to trade through it, hits the mean, I'm out. Mean threshold's my out before it hits my stop loss. And see, now we've got this fair value gap right here. Right there. And now we're going to go see how it's extending. And I knew it was extending the moment I saw that go in there. I thought, nope, I'm on the wrong side of that. Where am I at here? Watch here. Doesn't it have to trade to the new day opening gap? As you can see, I don't have new day opening gaps on my chart. But it could. Yeah, absolutely. Where's the new day opening gap? Let me have a look. Let me just put one of those. If I got one of those on there. New day opening gaps. Look at that. New day opening gap. Not enough for to show new week opening gaps with a 5-minute chart. Okay, I got you. That's why I don't have it on there, because it keeps giving me this stupid bar that follows me around everywhere. It sticks in the middle of my chart because I like to trade on a 1-minute chart, so that's why it's not on mine. I've tried that one before, but yeah, we're right on the new day opening gap right there. Good call, Cheryl. I want to show you guys this. This is kind of like a rule. I'm trying to follow this rule, and it's tough because my psychology gets in the way. Not only does I have to overcome this and this idea here and actually stay in price, stay on the horse here and let the horse take me instead of trying to twist the horse to make it go back the other way. I just got to take the ride. So when you catch this run down here that we caught this morning off of this reversal here, off this order block, that's where I got my short, and start running down here. I'm looking for, anytime I get a break below a low, and we're looking for that reversal to happen, right? And I think I got out on this one here. That was the first initial one I got out on. Then when I saw it go down here and I thought this objective is in here, I jumped back in again right at here. Right when I started closing below that fair value gap again, I go, great, now I know I'm still going short. So I jump back in again here. And then I got out right there when it came back and tagged me, because I was following the candles on the way down, and it took me out right there. And then I saw this happening, and I thought, ooh, and then we saw this coming up here. That's when we were all battling are we coming back this way? When that candle started happening, are we coming back this way? Or are we just coming back into that level? So then when you start to catch this long here, how to stay in it, because I've got stops going here to here, then I got another one from here to here, then I have another one from there to there, then there to there, then I lost one there, then I went to there, here. I've got like half a dozen of them jumping in and out because I get going. That's still going higher. Imagine, let's take this little take a bar here. We'll just kind of move it up as we go. So if we enter in off of that candle's low, we don't get the absolute primo entry, which is right here, but we have entry 2, which is the midpoint, and the entry 1, which is here. So you have that. Now, if you just let it ride, let it go, and just say, as soon as we get a reversal happening, that's my reason to get out, like I saw this one right here. So if we use the same rule that I used here, right here, you enter in, you don't see anything here. Wicks don't count. Nothing. That big retracement would have been okay. I don't bother tracing my stop loss up. I just let it sit there. I can move to break even once it's got up here. You see that little bit of retracement? Nothing, nothing, nothing. There's another one here. Wicks don't count. Nothing, nothing. Right here. Wicks don't count. Right there. Reversal right there. I'm out. Right there. As soon as it comes back into it, I'm out. Then you see it trade above it. You go, oh, maybe I'm going long again. Aiming for that high. Do you want to take that trade? Aiming for that, the nearest high? If you do, great. You got a little piece there. It reverses on you. But see how that whole trade could have been taken all the way up to here using that rule I used coming down here. Does that make sense? So you can make some notes on that if you like. Try it out for yourself. Back test it. Do what you like. See how we've traded below this level right now? And now we're trading back into it. Now I want to see this start coming back down now. 11 o'clock. What do we have for 11 o'clock? We have the reversal. %50 of the range. Don't follow me. I could be wrong. But right now, that's my reversal above the high. Keep your eyes on that one. You've got this one for go lower and this one to continue pushing higher. So ask yourself, so ask yourself now, where would I put my stop loss? Right here. If I get confirmation on a close above here, right there, and if it attacks that mean threshold, I'm out. That's just my rule. So come all the way back up into the breaker that takes out these lows. You want to see the breaker give a little some support here now. So now I've seen this. Let me make this a little bigger. Now you've seen this. I don't want to see that revisit that. So now my stop goes here. I don't want to see it come back up into there. I don't want to see it working here. It's done its thing. This guy's held. That guy's held. I don't want to see it run through there. That's right. That optimum entry would have been right there. Because that's the one where you decide, am I going higher? Am I going lower? If I go higher, it comes back, it taps me. I get out. That's what the fail safe is for. So I entered in way too low, right? Ideally, you got to wait for it to come back to you. If it doesn't, then don't take the trade. Otherwise, you're going to get stuck in this $272 drawdown if that comes back and tags me and then goes higher. So ideal entry would be you'd be in profit right now, wondering, what's it going to do? Now I've got to wait for it to come all the way back down to me here. So you see how that would be the perfect entry right there? You got a tiny little bit of drawdown. Your stop loss is here. Now you're saying, I don't want to see it come back to me here. You've hit it twice. You don't need to come back in here all these multiple times. Get out of Dodge. So you see you're between this guy and this guy, higher or lower. So technically, should you be in the trade? It's a nice time. We've taken this reversal. So I'm more 50% bearish than I am, 51% bearish than I am bullish, right? And I'm in this small range here right now, and I'm sitting right at 50% of that range. And the only thing I got below me is this order block, so I got to get through here. And that's coming to me, so I'm closing that out. You can see that's already got no intentions of giving me what I want. So let's just clean that out. Mean threshold. Now I want to see that get taken. Close my other trade out here if that comes back into here. I closed out all my trades, even though the bodies are still respecting this right now. And this could turn around and come back down, and I go, well, I don't like that multiple taps there. You see, now all of a sudden we're into the mean threshold of this candle. You want to see something come up, tap it once and get out of Dodge. Now let's say you did go in there. Your stop loss is sitting right here. You could get a full take right here. Boom. Full take. I didn't like the fact that so stop loss up here originally. The fact that we see that coming back into here for the third time, that's why I closed it out. That's the upside objective there. Let me get this guy across here. Oops. Anyway, that's about where we're sitting. Yeah. So you got to watch the candles. You'll get a feel for it later on and go, no, that's what I want. And if it starts to eat into here again, then I'm on this is going sideways, and I don't want to be going side. I want to see something come up and go back down with some intentions, right? I want to see it come up, come down, and get the hell out of Dodge. You see how it just zips right back into it here, and then pulls back and then leaves. That's what you want to see. You don't want to see this waffling around in here. It's multiple hits at little wicks that don't really go anywhere. They just fill that little fair value gap right there. Going higher. I just gave back 137 bucks. See how that found support at it? Bing. This is the one over here. We drove through it, come back, found support at it, and now we're going higher, extending the range, taking that high. So for this one, in order to get back online again, you'd have to see it come back to here, because we didn't get anything retapping here. Once we broke through it, nothing came back and tapped it to keep going higher. You got that one. Do we have anything come back and tap it? Nope. Then you look for the next one, which is right here, through that. And you're already at the high, so is it worth taking? Now you got the same kind of thing happening here, over here. We've just taken these highs out. That's a lot of liquidity sitting up there. Fair value gap over here now. 252. 252. Oh, 250. Just short of 252 right here. $10.56 is the breaker. 10.56. $10.56. This one, not the breaker, no. This is the breaker right here. That up close candle that runs down, takes this low out. That's the breaker. And this is the breaker that takes this high out here. This one here runs that. Then you've got this one here that runs that. So you got this one takes this high. This one takes that high. This one takes that low. Largest up close candle before a run below an old low. That one, that's your breaker there. So you want to see it come back into that. And then you look for your breakers over here that take out old lows. And that one just gave you a nice little return support. Go higher. Way too focused on ITF. What's ITF? Or 1 minute time frame. Way too focused on it. Why? Why is that way too focused? Because we catch price action on a turn on a 1 minute chart that other people aren't catching on a 10-minute chart, and that you can make $1,000 in here or whatever you bet, whatever. Why is it way too focused? Breakers are useless. Don't agree with you there, man. Totally don't agree with you there. Breakers are amazing. You just gotta know how to use them. Old high. Come back to it. Nice touch. Keep extending. Breakers are useless. How could you say breakers are useless? They're freaking awesome, man. That's a breaker right there. Look at that. We called that right to the breaker. Sorry, buddy. You're way off. Breakers are awesome. So your support off of this level here, that little inversion, you got that old high. That would be what you would be heading for. Like I was said, is it really worth taking it? Then you find some support. Once we trade above it with a body, come back, find support at it right here. Push higher. Look for your next objective, wherever that is over here. Breakers, fair value gaps, inversions, whatever. Equal highs. You got a whole bunch of liquidity at 19,307 and 19,303. No, that would be what a freaking run on that call this morning at 10:30. That's a that would be a 300 pip run or 300 handle run. Yeah, and Mr. NQ, this is definitely not for you. This is what we focus on as a 1 minute chart, because we're just staying on price action. That's what the whole this whole channel is for, about studying price action. How you enter your trades is entirely up to you, but this is all about managing and watching price action. Yeah, you see me take some trades and stuff, but if this is happening on a 1 hour chart, same thing. If you study your price action on a 1 minute chart, it's going to make your trading 100% better. Just ask the people that are in here. You'll see. We have an old high taken. Fair value gap, trade below. We're going to watch this level right here and that level there. Taken. We have a nice displacement candle now. Return back up into here and here. Ideal entry again is right here. Stop losses are super tight. Should not come through you. If it does, then we know we've got further extension. And that 307, 303 level, which was that Asian high I think somebody just mentioned. Pounds, yeah. See how we hit the bottom of that guy right there? Ding, tap it here. Continuation on the downside. Now, whether or not you take that first one or the second or the third or the fourth or the fifth, that's up to you, man. That's whatever your trade entry, whatever your style of trade entry is. So there's a perfect entry there. See, we're catching this on a 1 minute chart. So is this insignificant? This lower time frame, too much focus on a lower time frame? We just saw price changing direction right here. You're inside this range now. Pull your fib tool from here to here. This is super sniper time, right? 50%. Move your stop loss to break even. Take half your trade off here. 62%. You'd move to 50. You'd be out right now. So if this reverses and goes back up, you caught the reversal in here on, I don't know if that really matters to you, that you just made 240, what was that, 238? So 38 pips or 38 handles. You may go, ugh, 38 handles is not worth my time. On a 1 minute chart, you just caught that little range right there. 50, 62% retracement, optimum trade entry reversal. Back to what? A breaker? A breaker? If we eat through it, right in the mean threshold, what the hell? Breaker? They're useless. I don't think so. Anyway. If we eat through this now, this breaker, we find support at that, and we want to see it come back up into our range. We haven't taken out any significant lows, so watch out for these little, we'd have, in order for this to be a continuation, I'd have to see that order block there get taken out to the upside. That fair value gap right there, close above it, come back, find support to go higher. This here is not a reversal, it's just a change in direction. I like to see it go lower from here, for sure. It's definitely got the reversal pattern that's just occurred. It gave you your entry. I don't know if that, is that the perfect entry? Let me have a look. I might be wrong here. But that's the level we were looking for it to return to. What is the low there? The low is 41.50. High on this is 39. So nope, just barely missed it. But that's the reversal. So you wait now for this candle to let go. We're digging into this breaker now. Eating through it. I love it. order block, little swing point, continue on the downside. Continue, senor, continue. If we trade through the top of this and find support at this, look for a run back up into here. There's the mean threshold. There's 70% optimum, and it's filled that fair value gap below you there. So if that's your objective, to run into here, this small range that we looked for, and you went 50, 62%, came back, tagged you at 50, you're out, big deal. If you waited for the full fill at 70%, you got the full fill of that fair value gap below you here. If it trades above here, look for this order block and that there. So the ideal entry is 11.19 close, 11.18 close. This one right here, that would be the ideal entry for a short. And if it trades above you on a close, and your stop loss is sitting here, and it comes back and tags you out, you get to break even. If it doesn't run through and take you, and it's that close, then chances are it's going to run and take you. But that would be the, I've seen it many times come right up, tag it like that, and just go ripping down, even that close. So see how we're going sideways inside this fair value gap right now? Yeah, this one's, oh yeah, the 19 close. Yeah, I say what you're saying. Not the ideal entry, but it is telling you that we have a change in direction through here. We've taken out a little, is that a swing point there? Anyway, you've taken out that fair value gap to the downside. The fair value gap didn't provide support. You ate through it. So now you're looking for the reverse. It becomes inversion. So that inversion, you want it to provide support to continue going lower. That's how I use those. Yeah, Derek, some guy was saying that breakers are useless. Blasphemy. I know. I thought, what? Breakers are useless? Jeepers creepers. You either don't know what they are or you don't see them. I have to respect people have different views on stuff, so they've obviously been useless for that fella for some time. He hasn't found the value in them, but that's a shame because they really are great. I respect you, Mr. NQ, for whatever you believe. I respect you. I don't agree, but I respect your opinion. Okay, that's a risky one. Why is it a risky one? Are we still talking about this change in direction? Just because you have a change in direction doesn't mean you have to take trade. Look for other confirmations to say, am I, I've got a swing and I got like a swing. What's down here that price could run back to in a quick little reversal to go higher? If I just want to get an optimum trade entry here, well, there, if it comes back into here, I'll get that short. Stop losses here. Optimum entry would be there. If I can catch this run down into here, that's all I want. Quick, easy, in and out. In and out burger, man. Now we see this one here get taken on the downside. Right there. See how these closed below it? Then we close right up on it. So this tells me on the if you're looking at this from a 50-50 perspective from this fair value gap, see how that closes right on it? If it closes on it, and not above it, that doesn't give me a bullish. It gives me, I'm still bearish because we closed below it. So bearish, staying bearish, staying bearish. I'm inside the fair value gap, came back up. Oh, now I'm definitely bearish because I traded below it again. Come back up. I'm more bearish still, so I'm more 51% bearish than I am bullish. Well, if I trade above here on a close, like I was saying, if we lose this candle on a close, then look for that range there. Other than that, we've got another level of support that supports price. This one here, change direction. This one here, I can get rid of this guy over here now. But this little fair value gap here, we traded below it right there. We trade back up into it right here. Short. Finally hit our objective. So even if that was I couldn't get my entry there. If I can catch this guy for that last little piece there, I'll take it. You catch one candle for 1 minute to there. Again, you got to know what it is you're looking for. Not that that's the trade you take. I'm just trying to say, if you're looking at price action, that is where price is saying, look, there's a point here. I'm aiming for here. I'm just coming back into my fair value gap to drive here. Now we've got right back into this fair value gap once more, because it's a downside discount array. That's the premium. This is the discount one right here. Right here. There's the reversal that you get going above to go higher. That's the discount array I'm more interested in right now. From there to there. Come down, you tap it. Now go to premium array. If this doesn't hold, this goes on the downside, looking for lower lows. If this holds and we start to get support and we climb above here, we're looking for this one. Pop low. Just give me a pop low. Close below. 37 seconds. Wicks do the damage. They just come down here and see that equal lows there. They took out these two candles and they're equal lows. So if you tap the bottom of that, which is right there, look how precise that is. That's got to make you guys just go, there's something to this. There's something crazy to this. Now, I want to see this run above here and get back into here. Now, don't take this as a trade. This just doesn't encourage you guys to take a trade. Just study your price action right now, because we're starting to go into lunch hour and I'm getting ready to go. My wife and I are trying to make this plan get healthier. So I'm going to trade with you guys till about 10 o'clock our lunch hour. And at 10 o'clock my time, then we're going to go out there and do some exercise and get out and enjoy the day. Why is 1052 fair value gap is important for you, Darren? 1052, 1052. This one right here. Well, which one? 1052, 1052. This was important for me because in order for me to be, like we were talking, as we go up, this becomes important to me. At that point, it was important for me to trade above it or below it. See how we traded below it? So you go bearish. Then it traded above it, you go bullish. So it goes bullish for that level. Then it traded below it again, so you go bearish. And it ran down into fair value gap here, fill. Then when we trade above it again, because there's no other one, and this guy right here, they are overlapping each other. So I'm a fair value gap kind of guy. I like to trade fair value gaps and inversions, if you haven't already noticed. So it traded above it right here. That guy right there. Trade back into it right here. All the bodies are, all the candles are respecting it. That's where the wicks, you want to see it leave. So it leaves, takes that high. That's why they become important, and this was important. So that's why I look at that and I go, where's my discount array? It's this guy here. And that's the one we hit perfectly in the bottom. Now I'm looking for this guy up here. or this guy here. That, remember, we went to the ideal entry right there. We still have 1, 2, 3. Don't forget the mean threshold is still playable. 1, 2, 3. The high, 4, middle, 5, top one, 6. So there's 6 different entries. And if you're into this candle as well, you've got 1 here, mean threshold, and the high as well. So just watch, we're going from like array to like array now. Like array, which we couldn't get in on. We were trying to get to that one. So if we could have got in on that one, like array to like array, boom, hit it. You would have caught a small little smash there. Looking for this guy down here as well. And now you want to see a reaction off that, which is nice. Now you want to see this keep building higher. Again, this level, if we trade below it, then I look for these lows here. We look for an extension of the range. Here's how you know when there's a higher likelihood that you're going to extend the range. When you clear this one out, then we're going to go higher. If we just come back to it and bounce, look for the discount array, and this is that trading a consolidation. A lot of people don't know how to trade consolidations, and a lot of people don't want to trade consolidations, but I just want you to study the price action inside a consolidation, and you'll see this kind of stuff. You'll look for fair value gaps. If you've got 1 and 2 in a premium and discount array like this, if you've only got 1 that sits in there because your range is so freaking tight, you look for order blocks like breakers, mitigation blocks, price imbalances, something to reach for inside these small little tiny ranges. You're consolidating in here. You look for 1 candle overlapping the next candle. You can't trade candles that overlap each other. Like this is the lowest candle that took that high. So that would be like the breaker that takes that high right there. And then that is the highest closed candle right now. So you say, if I'm between this candle and that candle high, they're both down candles. If we're reversing, we're coming back into the breaker, literally off that high. And this one starts here, trades down to the breaker, literally trades up, and now we extend past that range. So literally you're looking at 1 candle to the next. This is a lot more fun to play in than trading candle to candle, because you'll just see them bouncing off of one another. So you want to see this come back to your breaker. Takes up that little high. Now you say to yourself, when I watch this, I go, is that mean threshold going to get taken now? Or does that mean threshold provide support? And then we trade back up into this candle. See on the body, literally right off the body. Remember, Michael talks about a candle has, we'll use 1 candle, for example. 1 candle has 3 different potential entry points. So you have the low, the close, and the mean threshold. So you have the high, the low, and the mean threshold when you're looking at it, when you're coming down from the top on it. If you're coming up to it to go short, it's from the bottom. And then Michael also breaks up this wick into quads, right? Half the candle, half the wick, so on and so forth. So here's the body. There's the mean threshold. Look at that, right on that mean threshold. It literally closed on it. Look at that, right on the money. And then we're exiting off of it. So that's why you look at price and how it bounces off of each one of these candles. Now you want to see mean threshold of this candle or the bottom, which is there. There's the mean threshold. Look at that, it's eating through it. So now you see it stuck. It's going, I'm bouncing off of these arrays between this candle and that candle. I'm stuck. I've got to extend the range. I've got to go higher by taking out these highs, which makes this candle the breaker, right? Because that's the last lowest down close candle before taking out these highs. And then whatever that candle forms in here, what's the next up close candle above me? Above this level? Well, you got this guy here. So mean threshold there is what they've been banging off of multiple times here, is off that mean, the highest candle. So now you want to see that extend the range, go higher. And we're looking for up here. Consolidation, CAM model. all these things you want to be thinking about. CAN model entry. Again, you don't want to be running for a CAN model just to run to that. We've looked at discount array, premium array, consolidations. We talk about, I've given you lots of things to look at here this morning. I don't want to overload you with too much information, but that's what goes through my head. It helps with a little ADHD too. Like you have all this stuff go through your head. And when you see it so many times, you'll you focus on those candles and what you're looking for, you'll see it. When you identify a breaker, does the candle that says takes out the old highs need to close above it, or wicks will do? Yeah, well, if a wick takes out that high, that's still consider that. I always like to see something close above it in order to see it to facilitate a move. But it doesn't, a breaker is validated the moment we trade above it. It could be a wick, it could be a body. If it's a body, it has a different meaning for me. It tells me, body trades above it, now comes back, finds support at the breaker. Look at that, right at the top of the breaker. Now I want to see that breaker hold price and start pushing higher. Because then the next one is the, again, back to the body. You could use both of these if you want. But because that candle is the high, I like this one. So now we expect to see this hold price. Now this one is validated. So you're between this candle and this candle. You want to see it tap this and pull back. If it runs through it, mean threshold right there, you don't want to see this. You don't want to see this coming multiple times in here. So now you want to see it sweep these lows. If it takes that mean threshold there, watch that. The fact that it's chipping into it right now, I don't even like that. So we're probably going to come below these lows now. You want to see it come down, tap it, and leave. Watch where it closes. Got 28 seconds. Yeah. See how if you watch it enough times, you go, no, that's not, doesn't look right. I should tap it and go. It's not. Chances are it's going to go lower. So that breaker gave way. Breakers are useless, hey? That breaker was useless. Didn't help me at all. It gave way. So it tells me something. Now that breaker becomes important on the downside. As we trade back up into it, this breaker here and that breaker there, they're overlapping. We've got one that takes out these lows, and you got this one that takes out these highs and these highs, right? So they're literally, take your pick of your poison. And we've traded below that level, the discount array. So that tells me we want to go lower. See how we close below it right there? And you go, okay, now we've taken that on the downside, taken that low, and we've closed below here. The discount array means we're going to extend the range. We're not going to get back up to me. So I'm going to go, I have to be flexible enough to go, nope, we're not going to get my premium array. We're still heavy. We're still going down. So the reversal that we had up here is still holding. You didn't get a chance to get in on it there or there. You would have got in on one here if you would have gone with that one. This one here, you would have got that one all the way up to there. And it's still slightly closed above you. And then switched up, traded below you again, traded below the discount array. Come back into here now, find support off of this, and continue going lower. If we trade above this, remember we've taken this low out, your eye goes here. Now, what do you guys want to see? I won't give you the answer, but what do you guys want to see other than just this to confirm that we want to go higher? Mitigation, or I guess, is that a breaker? That would be. Last down close candle before running these old highs. You come up inside that one. I still want to see it come back up and tag this. Yeah, if it runs for the breaker, then more chances are we're going higher or lower, right? Especially if we close below the mean threshold or above it. There is times where it'll come up to the mean threshold, and then you'll see it still go through and then come back down again. But look for key levels. Look for that breaker now to provide some support. A lot of times it comes, the mean threshold gets closed, and then it continues running back up again. But look for whatever fair value gaps above it. I like breakers in that. There we go. We're just tapping it now. You want this to provide a level of support here now. All the way up to the base of this. That's this breaker and these breakers. Optimum trade entry, if you looked at this, is at 50% of that range. 50%, bing, right on the money. Anyone want to see that go lower? Also, CAM Model 1 entry. If this reverses now and blows through here, watch this. CAM Model 1, CAM Model 2 is right about in here somewhere, halfway mark. And then a CAM Model 3 would be if it came back and used this leg here, 50% of that leg to go higher. Look for your price projections now. Pull your swing projections out. You got the little watch this level. Watch. We've come up into that breaker. We're inside the double candles. Remember, I like one candle or two, depends on which one you're looking at. Both are valid. Right back up into abs. If abs was watching this right now, he'd be like snickering. You want to see this fill here now. Now, tippy tap. If it doesn't and starts to run through here and come back, find support at this, this is the level we want to see here now. If we trade through it, come back, find support at it, we break structure to the upside, we want to see this candle here provide support. Like we saw back in here. See this here? When we see a body break above it, what do we call it? It's that useless breaker we talked about, right? We trade above it, come back. I won't keep harping on that poor guy, but that breaker, find support at it. That's the same thing here. There's your fair value gap. Fair value gap. Rinse and repeat to go higher. That's all we're looking for right here. If it doesn't, if this just comes back up here, a lot of people think, oh, now I'm going long. We have not traded above this level here yet. So I don't have a change in direction or a reversal yet. 10 more minutes. And then you start looking for, let me get rid of all this here now. See how it's come all the way through. Look at these important levels. I'm getting rid of them. But you know, we cut through candles. Michael's not kidding. We cut through candles. And what do you want to see? What do you want to see? That little thing I was looking for at lunchtime, for lunch, the place we were heading for this morning. Take out the morning low and then head back for that one little piece I was hoping for this morning. I was talking about, would it take it after lunch? Wouldn't that be fun if it took that? Hey. So CAM model 2. Now where you draw your fib tools are your business, but this is how I would draw mine. From there to there, 50% is right there. Come back 50% of that range and start going lower. CAM model 2. And there's a fair value gap sitting right in there around that range. That's where you'd be putting your optimum entry in. Now you want to see it start closing below here. Get out of this one now and start using this one. This little gap right there. So watch, you got one more second. See how we closed above it? Come back, find support at it now. You're going to go higher. Changing direction. Watch the mean threshold of this candle. We may get a run up into here before going lower and may go higher. So just don't fixate on this just yet. That's what I'd like to see, but you got to stay where price action is. Right now we're going bullish. I don't know if you guys can hear all that water. We got a washing machine that sure likes to use water. It sounds like it's pouring it through the whole house. Mean threshold. Discount array, premium array. Again, your ideal entry is down here. We haven't got back down there, but that's the ideal entry. Mean threshold of the breakers holding. Fair value gap fill. when you, does it, okay, camel one moment, so it could happen for a short. Yeah, be prepared to change yourself up with a cam model. If you go through, if we close above the mean or the 50%, then we're going to go higher. So if your stop loss is sitting here, if you close above 50%, you're going higher. NQ, I believe, did its bearish liquidity run this morning, still has some price above Asian high, above already taken the London high. I'm not trading this time. I gotta hit the links. Indeed helps. Did you see the YT Trump playing with Bryson, trying to beat 50? Cool video. Playing with Bryson, trying to beat 50. No, I haven't seen it. Cut through those candles. What do you know what? I wish I knew how far back he thinks candles retain their importance. Yeah. And you'll find that some still do, but these short-term ones seem to be the stronger. They get weaker, obviously, as they go back further. It's hard to call, really, because you can go back to ones that are like forever ago on a 1 minute candle and find out that they have some significance, and the ones that are short are significant. It's, I guess, whatever range. I keep running into these ranges. I keep trying to look for the ones that provide support inside the range I'm in. And if the range extends, I go back to the next highest range and I look for the one that's back there. And I'm always staying inside ranges, and I'm always staying, if that range extends, I think if that pushes through here, it's going to extend to the next range or back up into the higher part of a larger range on a higher time frame. So that's kind of like what I look for constantly. And there's so many things to kind of take into consideration. It's hard to know which way to go or which one to rely on. It's amazing how you don't have to mark those fair value gaps, etc., and still be able to see them. You'll get your eye will, you'll start to, your eye will draw to them instantly after a while. It'll come to you, Curry. It'll come. Right now, it's more bullish. Shark, it's more bullish than bearish. It's like a 51% bullish. All the time we're staying above here. The fact that we keep dipping down into it is not a good sign for me. But you want to see this slowly start to keep climbing through this breaker. The mean threshold of that breaker is holding price right now. It held it right there, because you know how breakers are. And we've got back to this mitigation block. We ran all the way through here, back to the mitigation, up to breaker, inside the fair value gap. Now you want to see this continue to find these small little places to find support off of and keep climbing up higher, because mitigation is not as strong as breaker. So this one could lose the battle overall. So I look for this little swing here, that candle right there, breaker, mean threshold, you're between this guy and that guy. And this guy's been attacked multiple times, so it's a weaker one to this guy being attacked once. See that? So if he's super strong, he can take abuse. He's an old veteran breaker. And you just go slammo, and it just comes right back against you and blows through this little fella. That's a significant take on lows. This guy's just a little one. But he's supporting price. Mean threshold. Mean threshold. Eat, eat, eat. Just want to lock in some profits here. I took a long off of here on just one account. I didn't take it on all of them, just that one. I'm still aiming for up here. So that's your first one. You can pay yourself there. My stop loss is up snug as a bug. I'm in profit guaranteed, so zero stress trade right now. And I don't care if it comes back, tags me out, and then rockets through. I don't care. Make a bit of profit on top of what I already made today. I'm all right with that. Taking profits right there if I have to. Now, if it comes back into here, you want to find support at this. Because what is it? It's one of them there breakers. That's a mic drop moment for me. It's 10 o'clock. Pull your fib tool in here. Run it on the way up if you want. It's never good to trade during the lunch hour. For the fun of it, I entered a buy at 9194. There's your breaker. You find support on the breaker. Now push for the high. If the entry is long or short, young piggy bank. It's never good to trade during a lunch hour. Is it true? Unless you can trade consolidations and you know how to trade consolidations, you could have fun in lunch hour. For the fun of it, I entered a buy at 194. Good for you. Exit at 229. Well done, Derek. Micro small but improved. Stop at 155. Love it, love it, love it. Look for the premium array. I just want the premium array to get hit so I can drop my mic and go, told you. And our breaker, I hope our breaker guy is still in here. Come on, hit it. Come on, hit it. Just tell me. Come on, baby. Then we just hit that breaker or that mitigation block right there. Come on, tap it. I'm going to drop my mic. There you go. With that, I'm out of here, my friends. It's been a great day. I hope you all enjoyed yourselves. I hope you got to learn a little thing or two. And I love it when a plan comes together, hey? Tell your friends, come on back. Tomorrow's our last day. And that's it again for the summer. So it's nice to know we're still catching some runs. Now, if it extends past here, look for higher prices. And it is. So this is where you go, I don't care about this one down here anymore. Here's your confirmation that we're going higher. And we found it on a 1 minute chart. Are we focusing too much on a 1 minute chart, folks? Are we focusing? Well, I don't know. Anyway, I hope you all liked it. Enjoy your day. Take your profits. Move to the sidelines. Go to the links. Go see Derek over at the golf course. Get around a golf. And I love you guys. Thanks for tuning in. If you're new to our show, hit the like button and the subscribe. If not, just tune in and watch us. We're here every day. Well, we will be back in August. So I'll be back again August 18th, 19th. I think it's 19th. keep saying that. 19th. I'll be back on the 19th for about a month or so. So love you guys. Take care, and I will see you tomorrow.